Thank you very much to ACES for inviting me to address you on this virtual conference. I wish you all a great event, and I wish we were here in person, but this is the new normal of conferences, and hopefully it will be possible in the future. Let me just start by, hitting the top line of why Africa is so interesting. Effectively, Africa is the biggest opportunity in the world in the next century, for the simple reason that Africa's population is going to outstrip the growth in populations throughout the world. And by the year 2100, reliable population statistics provided by the United Nations World Population website suggests that Africa will be effectively 40% of the world's population, or around 4 billion of the then 10.8 billion people in the world. If you think that today we have roughly about 1.2, 1.3 billion people, the absolute rise in the number of people that have to be serviced, who will need jobs, who will need to consume food, clothing, who will consume technology, energy, telecommunications, internet, data, who will need education, health, security services to be provided. You can just imagine what that population explosion means for Africa and the opportunities. It also represents a great threat. The threat is that as the world resource contribution by Africa is only 3% today, but the world population is 17%. Unless we close this gap between growth and population contribution to the world, it's inevitable that there will be human implications. And let me just show you what I mean. In a talk I gave at Yale University, I estimated and ran a model that suggested that if everything stays the same in the world and Africa was to grow by a compounded annual growth rate for the next 40 years of 6%, we would then effectively go from 3% of the world's growth to 12% of the world's growth in the year 2060. But by that stage, the population of Africa will be 28%. That 6% annual growth rate is 1% better than we achieved in the last 20 years. So it's a kind of a stretch target, but it's unrealistic, one would think, that Africa will do much better than 6% per annum growth. But it only takes Africa to 12% of the world's growth share proportion, whilst the population has gone to 28%. So you can see we battle in the best case scenario to close the gap between contribution to world GDP and population. And if you take COVID, which has, the pandemic has hit harder the growth rates of Africa than any other part of the world, and some of the institutional weaknesses that Africa has, one could paint downside risks that would make that 12% much lower. You can pick your number, but you can see that if there's this yawning hippopotamus gap between resource contribution to the world and population, that is going to produce its own humanitarian crisis that could take various forms, such as migration, violence, conflicts, export of terror, and so on. And the most likely recipients of that is going to be Europe, because people will migrate into job opportunities in Europe. Now, that's both Europe's gain, but also Europe's threat. And it could indeed see the rise of right-wing nationalism in places like France and Germany and the United Kingdom in response to this threat. And you see certain signs of that already in some of these countries. And that is why somebody like President Macron is paying a lot of attention to the security situation in Northwest Africa and is investing heavily in the Africa region, both politically, in terms of security and in terms of economics. But for those of us who want to participate in Africa's growth, whilst there is that threat, the opportunity of the absolute incremental growth rate is massive, because in that time, if we do, in fact, grow the GDP by 5 to 6%, Africa's absolute GDP will go from about 2.5 trillion to 10 times that, about 25 trillion, meaning that there is a roughly $20 trillion incremental growth that Africa can add in the next 40 years. And it's obvious for those of you who want to participate in that growth, it's an incredible opportunity. Even if we achieve a half or a quarter of that absolute growth, it's a massive opportunity. And I mentioned that this opportunity is many of these sectors: technology, energy, education, human services, industry, and so on. Now, some countries like Ethiopia are playing the whole industrial competitiveness game very, very well, and they are positioning themselves as providers of competitive, productive labor in industrial zones to capture effectively the displacement from China of low-priced labor production, and they're doing that. You have places like Rwanda, which are trying to drive modernization reforms into the economy, but they have a problem that's very, very important, which is even if a Rwanda grows by, let's say, 10%, its GDP, it's only adding about $1 billion a year to its GDP. So what it needs is regional integration. And so that brings me to a key point, which is Africa Free Trade Agreements, which has been disrupted by the COVID pandemic, is massively critical to Africa leveraging to the upside of the scenarios I've painted. And so all governments and all business interests are massively leveraged to assisting the African Free Trade Agreement to succeed. Then let's ask ourselves, what about the big countries? I always at Yale talked about the big countries being, primarily South Africa, Nigeria, and Egypt, and then a second rank of countries, including Ethiopia, Kenya, Angola, and some others. These big countries are facing headwinds. In South Africa, the headwinds of a low growth trap and very high unemployment and a weak political environment means that it's very difficult for South Africa to effectively come out of this pandemic on a strong wicket. Fortunately, the commodity environment and China's voracious growth, which should continue even if it slows down, supported by a world environment driven by the world's biggest economy in the United States, is going to create a very conducive environment for the foreseeable future in the world economy and for commodity export economies, whether they're oil exporters like Nigeria or mineral exporters like South Africa. And so what you've seen in South Africa is a massive fiscal dividend from the commodity boom, around about 100 billion rand incremental net tax. I would estimate that will come into the fiscus that wasn't anticipated 12 months ago. And this creates fiscal room for South Africa to grow its economy and kickstart it. So recently I put forward, together with Pramal Dawan from PIMCO and Nouriel Roubini, a famous economist, a new bold growth plan, which effectively suggests pulling together social welfare expansion, fiscal consolidation, structural reforms, and recapitalization of businesses into an integrated package that will drive South Africa's growth. But it needs political will, and it needs a strong and tight relationship between the various stakeholders in South Africa to succeed. Time will tell. Nigeria has had a very difficult environment in the political world and its institutional world, in which, not unlike South Africa, the elites have benefited and poverty and unemployment has grown. But the endemic corruption in Nigeria has, prevented economic reforms from driving the growth that it should experience, particularly given its very large population and demographic attractiveness. It has very strong businesses with tycoons that drive these businesses and banks that are very active. But the opportunity of driving fintech, telecommunications, and energy into that economy is massive. And one wouldn't bet against Nigeria, but at the same time, there are many weaknesses and challenges that, like South Africa, they have to deal with. Egypt, has a very strong demographic environment, but again, the political headwinds from the Arab Spring continue to make investors nervous, even though many investors, and I bet there's some amongst the audience, that have benefited from the Egyptian growth story. These other countries, I've touched on Ethiopia and Rwanda, that are each doing quite well in their own way. Angola is worth mentioning because Angola is rolling back the Dos Santos regime through the interventions of the current president. And it is becoming a much more contested economy, much more open economy. And that's interesting and will be supported by a strong oil environment in the world. It's very leveraged, as you will know, as is Nigeria, to strong oil. So it tends, these countries, Nigeria and Angola, tend to benefit very strongly in strong oil and tend to suffer and not be able to pay whatever is owed to various parties and is short dollars in the low commodity cycle. But I would say, Africa is full of opportunities. There's also the oil and gas discoveries in places like Mozambique. And to the extent that governance and the responses of the big companies and the governments allows, these commodity plays or these exciting opportunities should provide massive growth opportunities. In Mozambique, the new developments should create about $50 billion of capex in that country alone, in which the economy is about one-fifth of that in size. So it's a massive development. Obviously, Africa as a whole will benefit from multinationals, will benefit from tourism, and multinationals, of the tech kind, like Google, Amazon, Facebook, are rolling out data centers. They're rolling out tech capacity, and South Africa and others, indigenous companies like MTN and various others are doing huge amounts to build the institutional capacity of the infrastructure of Africa. And this is very encouraging, I would say. There are obviously lots of things to do and not to do. I don't want to lecture you on those, but clearly the MTN examples in Nigeria are indications of you can build a great business and then you're attacked if you don't have indigenous partners, you don't have indigenous listing, or even if you do, there are issues like tax or registering SIM cards or those kind of issues which can be used against you by the regulators to effectively make sure that they participate more directly in the success of your business. So sometimes success breeds, conditions for your own challenges and sometimes failure. And you've seen that in various countries. So it's very important to build your regulatory relationships, your partnerships on the ground, and to learn the lessons from the do's and the don'ts. So with that, maybe the final comment is, what about the international community? What do we want from them? I mean, firstly, the multinationals in the world obviously are very active in the consumer space, the technology space, the information space, the mining space, the oil and gas space. And we want them to continue because it's good platforms for building the economies in these countries. And hopefully it's a win-win situation for them and for the local economies. But it's also important that the countries of the world, and particularly the big powers, particularly the Chinese, the European Union and the United States, adopt a cooperative approach towards Africa, because we can't have Africa as a ground for competition. This is something that I spoke very strongly about again at Yale in a lecture I gave called China versus United States, a battle for Africa, in which I argued that in order to leverage Africa to the upside outcome, which is the 6% growth rate and closing the gap between population and the economic growth contribution to the world, we have to get cooperation from the world's powers to help Africa build institutional capacity, to help Africa build its own responses. The pandemic, COVID vaccination, for example, is one practical case, but there's many, many instances in which the world can be powerfully helpful. China is clearly conducting a century-long, in my view, strategy towards Africa and is powerfully coming to the party in terms of building Africa's infrastructure and participating in economic development and investment. The United States is doing its fair share, but it can do a lot more by both coordinating the multinational responses and seeing to effectively central-led investment and aid and trade arrangements that provide the power of the United States against the backbone, in favor of the backbone of Africa. And if China and the United States, supported by the European Union, particularly France, Germany, and the UK, would come strongly behind Africa and behind Cyril Ramaphosa, the African Union chairman's vision, Africa will be a lot stronger. So between private equity, between the venture capital world, the infrastructure and the fintech boom, the energy boom, the oil and gas boom, and the multinationals and countries supporting Africa, this will just provide the support to the backbone of Africa that it needs to get a better outcome. But in the end, it's up to Africans to make the running. It's particularly important that South Africa, Nigeria, Egypt, and the larger countries succeed. And we have to do everything we can to get growth, the growth engine, turbocharged so that we get to the good outcome. I wish you well tonight. Have a great session. And I look forward to hearing from all of you in due course. Thanks so much.